Good afternoon, everybody. First off, we'd like to give Gaz a shout out, a happy birthday shout out. It's for the audience who's watching, it's Gaz's birthday today, so happy birthday, Gaz. And right, so I will first do a quick introduction of our panelists. So we'll start with Gaz. So Ghazanfar Iqbal is the head of business development startups for Pakistan, Malaysia, and Vietnam at Amazon Web Services. He's passionate about nurturing the growth of Asian emerging and mature markets in the startup ecosystem. Gaz's mission is the empowerment of startups through the integration of AWS cloud technology by not only enabling startups to scale, innovate, and compete on a global scale, but also to foster a collaborative ecosystem that aligns seamlessly with AWS vision and mission. He has in the past been the country head of sales for Careem and is an Acumen Fellow as well, and co-founded Pakistan first Pakistani startup funded by Antler, a global VC and accelerator. And next we've got Bikesh, is the founder of and managing partner of Lead Ventures, a seed stage investment firm targeting tech startups in Southeast Asia. He holds a robust track record in launching, scaling, and mentoring startups. Bikesh's insightful perspective are built over a decade of experience in the startup industry, where he has successfully bridged the divide between entrepreneurs, investors, and corporations. And next we've got Shiyan, who is an experienced operator and investor. She's currently the general partner at Hustle Fund, which is a global pre-seed and seed stage fund based in San Francisco and Singapore. It's an investment process. It's designed to identify and invest in teams who demonstrates relentless speed. Prior to Hustle Fund, she was VP of Business Operation and Corp Development at NetWallet, the 10th employee there. So growing annual revenue from 1 million to more than 150 million. Very impressive. And prior to NetWallet, she was an investor at Institutional Venture Partners, a growth stage venture capital fund, and Bridgewater Associates, a global macro hedge fund. So, by the way, Shiyan is currently based out of Singapore, and Bikesh and Gaz are based out of Malaysia at KL. So before we begin, I would like to set a context here on the definition of startup ecosystem, because today the topic we're talking about the startup and VC ecosystem in the emerging markets. So according to Startup Common, a startup ecosystem is formed by people, startups in their various stages and various types of organizations in a location, be it physical or virtual, and interacting as a system to create new startup companies. So that's its definition. It's one of the general definition that you would see online. But interestingly, I see no mention here of governments and its agencies as one of the, if not the main, ecosystem builders. So I would like to start off, by getting the panelists' view on how important do you think that government play in shaping the ecosystem in their own market. So maybe I will start with Gaz.
Sure. First of all, thank you for inviting me over to this virtual setting, this platform, and glad to be here. Yeah, to your question in terms of how important governments are, I think they are super, super important. So I've been managing multiple markets, Pakistan, Malaysia, Vietnam. I have also managed Indonesia. And what I see the trend is that if the government is not supportive enough, then the startup ecosystem will not grow that much. I'm not just saying from the funding perspective, but from the mentorship perspective, from the business perspective, and also from the global perspective, we get into these partnerships. So for instance, in Pakistan, we have national incubation centers that come under this umbrella of Ignite, which is run by the government of Pakistan, right? Over here in Malaysia, we have MDEC, we have My Startup. and all these organizations that get support, even Panjana Capital, one of our Activate partners as well. So all of these organizations are one way or the other, directly or indirectly, associated with the governments. And then these governments, they plan 5 or 10 years ahead how the country is going to look like in terms of economy, in terms of GDP, in terms of growth, in terms of their natural resources. And all of these have a certain, problem data set that through technological innovation that we can solve. So the private sector or the government sector has to come hand in hand to support the startup ecosystem, to develop them. And without the backing of government, I don't think it will grow to such an extent. Yes, there are accelerators, there are incubators, and there's a VC ecosystem as well. Even then, if the government is not fully invested in developing the new companies, the new technologies, then I think it will be a problem. Even from the corporate sector, I see that a lot of these enterprises that we work with, they want that agility, they want that innovation that you get from the startup ecosystem, right? So they collaborate over there. So I see the same for the governments and for the ecosystem, private, that includes all these incubators, accelerators, VCs, to collaborate, work together. If there is no partnership, then the innovation, I think, won't happen.
Right. Thank you for that. Bikesh, do you share the same view?
I guess they play a role, right? To make an environment conducive, it's more of the infrastructure policy. So I guess sometimes it's just blurred lines. I'll talk in the context of Malaysia. Our government does too much, plays too much of an active role where they should not. They should be more hands-off. Let private sector dabble in it if you make the environment conducive. Regulatory impediments, giving access to things like sandbox for the SEC, Bank Negara, you have things like that, making it better in terms of environment for taxation, like withholding tax. Suddenly they want to bring up capital gains tax. Doesn't really create great arguments for someone who want to come into Malaysia, set up funds and invest into the local scene. So I think if they just focus on what does it take to set up in terms of policies and then step back and let the market forces do what it's thing, then it's great. But when they're so fascinated by saying we need to be creating 5 unicorns in 5 years, we need to be in startup genome report top 20, whatever that number is in the next 3 years, that's when I think they lost it, right? They lost the actual why we're doing this, and it's just chasing that means. It's kind of pointless.
Right. Thank you. So Gaz says government needs to be involved. You're saying sometimes they're involved, but too much is also no good.
So involved in policy making, yes, but not on the actual day-to-day running an accelerator. You don't need to do all that stuff. Yeah.
Correct. Right. Okay. Interesting. So, Shiyan, what about you from, where you're based at, and you spent some time in the States? Do you see that, it applies on these 2 different markets as well?
Yeah, I would tend to agree with Bikesh. I mean, I made the joke that I lived in the US for 20 years and I never interacted with the government, except in an adversarial DMV sort of way.
Right.
And then I came back to Singapore and everyone was introducing me to government people left, right, and center. And it was very confusing at first. You're like, are these people starting companies? No. Are these people funding companies? Sometimes. So what are all these people running around doing? They're all facilitating, and you're just like, what does that mean? But I think policy is really important, right? So if you think about, I think Bikesh highlighted tax treatment. There's also bankruptcy and personal liability, right? Startups have a very high failure rate. And so if you don't have the right treatment of personal liability, then why would anybody take any risk? And then also that shows up in terms of board directorships. So, to what extent is the board responsible for the wrongdoing of, the CEOs and things like that? So I think there are roles on a sort of setting the guidelines around how startups can play. But I think in general, if you yourself have never started a company, why should you run an accelerator and give advice to people on how to start a company? It just seems very tangential. But then there's other things which, I think depending on the stage of development of the country, it is pretty important, right? You need generally pro-business government orientation. You want, generally sane monetary policy, right? You don't want people like printing money and then leading to devaluation and things like that. That doesn't give confidence in foreign direct investment, because most of the time in the more nascent ecosystems, a lot of the capital is coming in from outside. They haven't necessarily built up their own internal funds yet. So I think there is a role for government. It's just, what is that role?
Yep.
And I think sometimes government take the models of industrial development and then they try to apply it to innovation, and it's just not the same thing. I think it's a really different thing to say, hey, I want you to set up a factory here, take advantage of my like low cost labor, is really different from saying, hey, I want you guys to come create things de novo. Like, those are just different types of enterprises, and you can't sort of run the same playbook for them.
Right. So obviously Southeast Asia, as we're so knitted closely together, and not every ecosystem are equal. But yet, let's say like in the case of Malaysia, where you can just easily cross border to Singapore, or in the north, just cross over to Thailand. So do you see what are the challenges do you see in this current setup in this region? So Gus, back to you.
Yeah. So like I mentioned earlier, we're working in multiple markets, and although we treat Southeast Asia as one region, every country has different dynamics to it. So for Indonesia, for instance, 270 million population, huge market, a lot of potential, and I see a lot of other ASEAN startups from different countries, setting up their shop over there, because they want that scale, they want that number, they want that consumer data set. But I see in Indonesia that most of the founders that are from Indonesia, they are focused more on that particular country. They are not scaling out that much as compared to other countries in the region that are going to Indonesia. So there are a couple of reasons to it, right? Because I had these conversations with the founders as well. One, the market in itself is big enough, like for them to, capture everything all together. So they are focusing on that. But the other is they don't have that mentorship or that guidance to scale that much, right? From outside, let's say, to other countries in ASEAN, or even to other markets in Europe or US for that matter. Though we have certain programs in place that we try to help these founders with. So that's there. For Vietnam, I see a lot of tech talent over there, right? That tech talent is being used by other ASEAN markets. And there's a huge potential of, emerging technology startups coming from there as well. Recently, we ran one of Gen AI accelerator programs, and the applications we got quite heavily from Vietnam and Singapore for generative AI space, right? So I see a tech talent over there that the rest of the markets do use and can use. Similarly, for Malaysia, I see the startup ecosystem still in its nascent stage. We have just one unicorn over here. It's growing, but it's not growing that enough as compared to when I compare it with Vietnam and in Indonesia. So the region is same. As a founder, I would say that you can operate in all these markets, but each markets bring in a different flavor to it, different challenges to it, which is great as a startup entrepreneur to learn from. But overall, I see the advent of emerging technologies. So I see a talent gap. So what you see over here that we are launching a data center infrastructure region next year in Malaysia, right? But we are also seeing the gap of the cloud technology on the skill set of graduates, young professionals. And we are addressing that gap through several programs in place. But if we want to grow, we need to grab these technologies firsthand. We need to have that talent and skill set as compared to some other markets in EMEA or on the US side, where the understanding is more. So that is one of the challenges that we see across the region as a theme.
Right. Okay. And what about you, Bikesh? Are your observations similar?
Sorry, what was the question again?
Like the challenges that you see in the ecosystem around Southeast Asia.
Oh, okay.
Because they are not, equal, right? I mean, like you can compare Malaysia and Singapore, like which you sort of briefly did earlier. So what are some of the observations that you noticed?
It's a hard question because it depends on so many things. So if I talk about it from our active investments in fintech, then I would say it's like investing in an amazing fintech company here in Malaysia. But as we want them to expand, as everybody wants to, for them to fundraise, there's always a need to be regional. And even though you have a license here in this country to operate payment, lending, whatever, it's like you start with ground zero when you go down to Singapore and Indonesia and Philippines. So that's a big hurdle itself, right? Because I don't know, maybe we need some kind of G2G relationships again. That's how governments can help out by saying, look, if there's a license over here, you quasi recognize it there, give us a green lane over there, whatever. So it feels like that's one of our biggest challenges, scaling startups out of Malaysia to the next country. Although we always say, see it as one, see it with little nuances, but if it's a regulated thing, throw the nuances out the window, man. Get the basics first. Just get the license. It's like ground zero each time. So that's one of the biggest challenges we see. From talent, etc. I guess maybe now it's getting a little bit more easier as we're okay with remote work. I think no matter what you see, your Singapore startup, your Malaysian startup, half of our girls are basically hiring Eastern Europeans into remote work to basically do stuff over here. So we just go wherever that's cheap. I think talent is something we'll never ever solve because even Grab tells me they have issues with talent. Apple tells me they have issues with talent. That's going to be universal.
Right.
But if one thing that is the region perspective that's unfair, it's advantage, I would say it's Singapore from a funding perspective. Because just last week I was in Singapore FinTech Festival listening to pitches. I was quite shocked, amazed. I don't know how I would use the words, but I was seeing pre-seed startups from Nepal, India, Bangladesh, you name the region, and they're all saying, I am Singaporean. They are pre-seed, early stage ideas, already formed a Singapore entity for the sake of fundraising, but they operate in their home markets itself, right? So it's become like a rite of passage. No matter what stage you're in, set up in Singapore, fundraise over here, but operate wherever the market makes more sense for you and cheapest, of course. So that's some things that we're seeing quite recently.
Yep, I'll come back to that point, but I would like to give Shiyan some time for her comments as well.
Yeah, I don't want to repeat what's been said. I think when you think about market, I think something people don't really think about is just like, what is the per capita GDP of that country? So even though we want to say Indonesia has like 300 million people, there's actually quite a large dispersion in the purchasing power of the people. And so, are you really selling to 300 million people? Are you selling to the 20 million people of Greater Jakarta? Then your market size just looks very different. And so I think people sometimes don't think about their customer persona and their not just willingness to buy, but ability to buy, and what is the cost of customer acquisition to go get that dollar. And so I think that is a big challenge of the region, actually, is that we love to talk about the great macro things that are happening, young population, growing, stability, blah, blah, blah. But like outside of Singapore, Malaysia, and then the capitals in the other countries, people don't actually have a lot of money. And so anything that you sell that is consumer facing, you have low basket, the basket sizes are small, right? So the AOV is low, but CAC still can be quite high because you're still educating a population about a new way of buying or a new thing. And your LTV isn't there. So I think there is an aspect of like, people really need to think about that math. It isn't just these sort of like McKinsey TAM slides.
Yep, that's right.
It's actually like the much more granular unit economics of the business that you think you're going to try to build. But I mean, yeah, and I think the talent thing, no one ever thinks they have enough talent, so that's just going to be perpetual. But I think an analog to the talent thing is an experience thing, which is like the Valley has the benefit of like multiple generations of entrepreneurs, right? Since like the 50s and like the early semiconductor industry. And that experience is not just technical, it is also marketing experience, it's operations experience, it's even HR professionals. Like, how do you convince someone to leave their cushy job to come work at a startup no one's ever heard of? Like, all these things are like tacit information that lives in people's heads. And we just don't have that level of experience floating around the ecosystem. We're only getting the first cycle of recycling through the people who have exited, the Grabs and Gojeks of the world. Whereas I think in the Valley, you've had, 10 generations of sediment kind of like laid down. And so that's also another thing that I think should improve as the ecosystem matures.
Right. So as cross-border VC funds, do you then find, like how do you find then, these startup founders, where let's say, for example, like what Bikesh have said, a lot of them are going to Singapore to set up shop. Whereas then, the government have made so much effort to try to keep the Malaysian founders in border, but then, on one hand, the money, maybe perhaps more money are available in Singapore, and then they want to set up shop there.
I mean, I think of Singapore as it's an incorporation place. It's like Delaware. Everyone's a Delaware incorporated, but nobody's actually, there's like no people in Delaware, right? So it's like, you set up your top co in Singapore, your service providers are probably here, right? Whether it's your investors or your lawyers, your accountants, whatever it is. And then you operate wherever you need to operate. You have a local opco that is owned. I think it can get messy only with some of the licensing. So on the regulatory side, right? Like for fintech licenses, they tend to want to have a local entity. In Vietnam, if you have anything that's like media related, that's quite sensitive, you need to have a local entity. So then there's some sort of, structuring hoops you have to jump through to ensure that like you both have economic control and like the right type of licensing. I think, I've heard of cases where, the Indonesian entity needed an Indonesian director, and then they didn't do the paperwork. So all the investors invested in the Singapore entity, which technically didn't actually own the Indonesian entity fully. And then the Indonesian director just took off with some money. So it's like, that's just like hygiene stuff, that you have to think about when you have these sort of like cross-border types of things. But I mean, I don't think Singapore is under any illusion that all these random people incorporating are Singaporean companies, right? It's just sort of like, hey, this is the function we serve in the region, and we will get some of the spillover as people fly through and use the service providers based here.
Right. So because based on what Shiyan have said, and then earlier you sent me a chart, which I'm gonna show it up on this slide here. Hold on, just give me 1 sec. This one here, if everybody could see. So then how would you think about this, this chart? And I suppose this is probably the talk in town right now, right? I just mentioned about the an article that was just recently written about Malaysia's ranking, ecosystem ranking. So would you like to share some comments on this?
Yeah, so the fascination was always about how to get Malaysia ranked higher and higher in the Startup Genome Report. And of course, there's a camp locally that says, who gives two hoots about that specific ranking itself? But if you kind of just digest what we have going for the country, there's not much funds, not much gets deployed. But for the money that's deployed, if you look at a ratio in terms of exits, it does get, although we don't shout about exits as much, because they're not huge $50 million exits, but they are exits. I mean, we get 4-5x on our exits. We've got 45x on our exits. We get 10x on our exits. We do this all the time. We don't tell the whole world about it. But Malaysia ranks higher in terms of exit proceeds versus capital investment, because we invest quite cautiously, but everything that usually gets invested has some form of trade sale. It doesn't go to IPO. So the investors kind of play a more cautious game over here, but they're doing well. So the idea is just kind of slowly ride on this, build on this, and make Malaysia what Malaysia should be, not just saying, how do we make Malaysia Silicon Valley? I think that's where no VC is going to say like, oh, so if I'm going to move the needle for you, I would deliberately create $100 million fund, deliberately fund more people and move them to Series ABC just to tick a box to make the startup report look better, rather than the only number I am governed by is called the IRR, my returns that I'm going to give to my investors, right? So if I want to do a small fund and it still does well, hey, it's great. So I think that's where the argument is like, what is Malaysia supposedly going to be, and where will it be 5-10 years from now? Do we care if there's 5 unicorns or 3 or 2? I think that's something we have to figure out how to let it take its course, but focus on what Malaysia is great at. Focus on industries that Malaysia should be looking at in terms of the E&E sector that we're quite good at up north, agriculture, the B2B stuff that we basically do, healthcare. We are becoming this aging nation, and so is our neighbors around us. Are we building things that matter around those realms of work rather than just trying to be fascinated with a typical Me Too B2C product from the US or Europe, and we're trying to just replicate it here? And no one's going to fund it. No VC locally is going to fund those kind of burn kind of companies. And it's become a trend, and nobody wants to fund such things anymore. So I think the fundamentals have shifted. We got to let it take its course.
Right. Guys, do you see the same in the Pakistani market, or as well as the other markets that you've got access to?
I mean, more or less, I concur with Shiyan and Bikesh on this. One of the points that Shiyan mentioned earlier about, the population size in Indonesia, I mean, I completely align with it. Previously, what was happening that, startup founders were saying, hey, I mean, this is that big of a market and we need that kind of fund to, scale over there. But mostly it is, focused on few ones, right? So for instance, in Pakistan, there are main 3 cities, Karachi, Lahore, and Islamabad, Karachi being the biggest, and then Lahore and Islamabad in the south. And that's where you will see most of the density of these startups, launching their products, launching their companies. But there is a huge population, maybe 60-70% of the population that is not in these areas, right? But when you sell it to the investors, you bring in the whole geographical position. So, I mean, there's a more understanding going on that end. So I completely wanted to echo on that. And in terms of the overall ecosystem insights and the slide that you shared, we see from our end, there's a funding winter going on. The focus has been changed, like Bikesh mentioned. It's more on sustainability. It's more on profitability. Like previously, it was about, the cash burning strategy and scaling rapidly. Eventually, based on your scale, you will be profitable or break even for that matter. But no, it's not that. But there are few sectors we see that are still getting the funding and the support. The emerging technologies, generative AI space is going huge. We see that is going to continue. There's a lot of investment happening from even the bigger companies, right? We launch several services on reInvent, which is our flagship event that happens once a year. And most of these services are focused on generative AI space, even the chipset that we are launching, even reviewing our credit programs. So we provide credits to the startups, but we see that the workloads that they are working on, that requires huge processing power. And that huge processing power has a certain cost to it. So yes, the funding is going to come in as well, but we as ecosystem players have to revise these programs as well from that particular space. So there's a boom that is going to come over there. One thing that I see in ASEAN market is that in the top 3 verticals for each country, fintech I see everywhere, more or less. So for Indonesia, I mean, if let's say for 2022, there was like over $2.5 billion or so of investment, out of which 1.5 went into the fintech. You see in Singapore, it will be fintech on the top as well. Similarly, in Vietnam, the fintech will be there in the top 3. So there are few verticals where there is still a lot of potential, there is a lot of scope, there is a lot of space. Even if the market size is small right now, but there are pockets within the countries that you haven't explored enough. But it will be challenging for 2024. It's not going to be an easy year. There will be a lot of mergers, a lot of acquisitions, less exits and more close-ups of startups. A lot of founders are facing that. Previously, some of them were, having this focus of a super app platform. We start this and we start that and we start this, multiple products on a similar platform. But now the focus is, okay, now we cannot experiment and, continue scaling on that. And we need to focus on few or even one. make it sustainable, make it profitable, and then go from there.
Right.
So from that end, we see the growth is going to be there in few sectors, few verticals, and emerging technologies, but not all over.
Mm-hmm. Now, you guys mentioned fintech a lot. In the region, correct me if I'm wrong, but Shiyan, maybe you can take this one here. But correct me if I'm wrong, but if you would like to operate in each market, the startup will have to apply for licensing to operate in each market, right? Right? So unlike Europe, where you could apply, if I'm not mistaken, I was told, correct me if I'm wrong as well, like maybe you guys have a more accurate information, that you could only apply for one license and then you can operate within the Euro nation. So how does that work? I mean, should we as ASEAN, as an economic bloc, look into something like that to be more conducive?
We can't even align with how we want to treat war crimes. So I think it's pretty challenging to integrate financial systems. I mean, Europe has a much longer history of economic integration and has ceded a fair amount of control to the European Central Bank, which makes these sort of pan-European licensing and policy making a lot easier. And even then, they still, I mean, you remember the sort of Euro crisis, right? You still have challenges managing a multi-country zone where there are huge disparities between a Greece and a Germany, right? And you kind of lose degrees of freedom in terms of interest rate policy. So I don't foresee that for ASEAN in the next, oh gosh, I don't know, 20 years. I just don't think, I don't think that that's sort of likely or even sort of, I don't know if that's anyone's actual priority as well.
Right.
So I think it's just the reality of the situation is that you're going to have to get licensed wherever you want to operate. And so you should think carefully about which markets you want to be in. And ideally, you know, the things that you need to get licensed get easier over time because you become better as an operating entity at doing that thing. Or you pursue sort of JVs or local market investors who are financial institutions in those markets you want to enter. You leverage their licenses to get started, so you're not sort of going in cold each time. The US is easier, but you know, having said that, there is state-by-state licensing for certain financial products in the US. So startups also have to face this problem in the US.
Yep.
And so they make the same calculation, right? They start with bigger states, like you know, you're not going to go to Delaware. You'd start in California or Texas or New York or Florida, right? So that if you're going to go through the effort of licensing, you at least have a bigger market to kind of get started with.
Right. So should fresh founders then reconsider their TAM, you know, when they're, you know, entering this fintech space, you know, like they can't just see ASEAN as one block to, you know, as that it's easily captured in the early stages.
Nothing is easy. I tell everyone this. Everything is harder than you think, and it will take longer and cost more. Nothing is easy. Whenever someone says that's easy, I want to like cry.
Right. Of course. Now, apart from the again, because you know you do cross-border investing, how then, you know, how do you navigate with different currency rates? You know, like if let's say, you know, you're based in Malaysia, and then let's say a Singaporean VC comes to you, and you know, I mean not Singaporean VC, sorry, I mean founder. I mean, if let's say, you know, they couldn't raise money in Singapore, they come to you, you know, and you know, and then maybe you like them, you're considering, but how does that work? Or you have never encountered such?
If they can't raise in Singapore, they came to me. I'm going to fund that too, right? So I'm not your, like, hey, if you can't raise that, come here, I'm your secondary fund. No. So I think we go in kind of same level that Singapore VC will look for. But yeah, it's freaking painful is what it is, because you know we are strictly a local fund. We are completely domiciled in ringgit. So when we have to invest outside our borders, it is freaking painful. We just wrote one in New York. It was painful as hell. We just did two in Singapore. Painful as hell. So yeah, those things don't help us. accounting for that, what we intended to invest. And then you have this little holes here and there, foreign gain losses, mostly losses, never gains. It's definitely difficult, especially for, again, it's a regulatory thing. You wire a substantial amount of money. The first thing we get sometimes is the money gets frozen. I get a call from the bank saying, hey, what is this? Even though, they know who we are, we've done this many times. And every time they'll hold it, they'll call you and saying, what is this? And it doesn't help that we also try and invest using instruments like safes. And then the bank manager sits down with you, is like, wait, what is a safe? You mean you're giving them money and you're not getting equity now at all? And then you're basically having a conversation, having an ad hoc training session in one of the banks with all the managers around you and educating them what a safe is. So yeah, it's not easy, but it's something that we still do because it's the right thing.
So obviously you would prefer to, let's say, go to invest a Filipino startup or Indonesian startup or Vietnamese startup where the currency, it serves to your advantage.
Yeah, but when you wire money to some of these other nations, it becomes a whole different other issue in terms of regulators and the banks calling you for other kind of clearance documents, etc. So of course, this makes us maybe think about, maybe the second fund we will also set up in Singapore and not in Malaysia. We'll have maybe a dual currency account with, exactly, a USD and a ringgit, so that it makes it better. But the answer of everything is crypto. No, I'm just kidding.
And Gus, what are the how is it like then for the Pakistani markets? Do founders usually commonly raise in USD or like in local currency? They like to talk about local currencies.
Yeah, till now, most of the investment, I think all of the investment is raised in USDs, and most of the VCs are based outside Pakistan. There are few local players, but then their ticket size is quite low, right? And Pakistan has other problems as well because inflation is there, and then there are some political challenges and what so. So it's an up and downhill ride along that road. And most of these startups, Pakistani startups, they have their holdco companies registered in Singapore, and that's where the investment is happening anyways, right? So it has to be in USD. But recently, there has been a trend where a couple of local players, some private investors, are trying to build up a local VC fund in a local currency, right? But the challenge is even your technology cost is going to be in USD, right? So and if you are earning in PKR, but you are paying that cost in USD, that is a challenge in itself. So I don't know how that will play around, other than that you're focused on the local market, you're using everything locally, and everything is getting, calculated in the local currency in PKR. But most of the investments are in USD, and sometimes they give more advantage because even there is a currency challenge that we see right now. If you see the trend, for the last 1 year, it is a downward trend for PKR currency. It's never that stable. So if your funding is in USD, you get that stability. Because even after inflation, the impact is not that quick, right? So you're paying salaries in PKR, but your funding is in USD. So that kind of gives a certain breathing space to these founders to, plan accordingly as well.
Right.
But there are some regulations around where I heard recently from some of the founders that if they are paying from outside account, let's say in Singapore, so they can come under this tax haven where as a tech sector, you're not going to be taxed. Income tax will not be there. So that income tax that you're paying on salary, that is kind of a saving. So you don't have to do those increments based on inflation. You are actually, going into that sector where the tax is not being applied to you. And that also gives you the leeway. But the bottom line is, for now, the funding is, whether they are the local players, local VC players, or the international VC players, they are doing it in USD. And majority of these companies are registered in Singapore or in US and Delaware. Yeah.
Right. So
just one more thing just to add on, sorry. So from a regional perspective, specifically Malaysia, so Malaysia also has now this whole withholding taxes on digital services. I think this is one of the things that's also affecting startups because they don't know how to navigate. So previously, if you're trying to do ads on Facebook, ads on Google, and it's actually billed by the US counterparts, you'd have to figure out, because no one's going to ask Google to pay your taxes and Facebook pay your
Correct.
taxes. So the companies had to pay 10% of that amount on their own. So now at least, Google, Facebook, some of them use their APAC counterparts in Singapore to bill. And I think we have a DTA, a double taxation agreement with some of these countries, and you get away with it. But it doesn't help that some people will still use things like MailChimp and this and that. I think these are some of the gaps that still increases cost of operations for some of us over here, right? Additionally, 10% markup just on some of the services. And that's complicated for some of the startups to figure out how to handle.
Guys, quickly, do the Malaysian startups pay in ringgit or USD to AWS?
Sorry, I went into the corner. My screen got locked. They pay in USD. They pay in USD, right?
too.
So once we have a data center in place, then the currency is going to change.
Right. Okay. Now, Shiyan, as an American fund that's based in Singapore, obviously your LPs are mostly from the States, right? So do you invest in USD currency or like in Singapore currency, even to the local Singaporean startups?
USD. Everyone is denominated in USD.
Right.
So, I mean, on the Pakistani thing, like the inflation is a real problem, right? So even if you raised money in USD, your employees are still asking for raises.
Yeah.
They need help with the inflation, right? And some of them, in fact, the more senior people with more leverage asked to be paid in USD. They would rather be paid in hard currency.
Right.
So that is a role for government, right? Like, don't neglect your economy. That would be really helpful.
So if startups are coming to you to raise in USD and they're looking at the TAM in Southeast Asia as a whole, and then as you said, a lot of times, like the Indonesian case, they may think that, oh, we've got about 300 million, like potential customer, but not, everyone are able to have that similar purchasing power, like you said. So how then would you advise such fresh founders to think about their Tham Sam Som in this case, and to be more strategic, as in like maybe if they're not doing e-commerce related, they're more like service-based kind of SaaS services. They should maybe look at certain pockets where they can leverage on the more poorer economy for on a freemium model, and then maybe focus more of their sales motion on, let's say, like economies where they could pay, like Singapore or KL, or even the Philippines, where they can pay. So what are your thoughts on that?
I mean, if you're really selling SaaS, I really wouldn't sell in Southeast Asia. I would just sell to the US.
Like
and
what?
Leverage.
Everybody?
Well, I mean, why do robbers go to banks? It's because it's where the money is, right? So, like, I just think that if you look at B2B startups, even in the US, B2B startups start selling to other startups because those startups have faster decision-making processes, and then they move to the mid-market, and then they move to enterprise. It's very rare that a startup wakes up one morning and it's like, you know what? I want to be in a 1-year sales cycle. Like you'll die, right? Basically, you die before you get your first customer.
Yep.
So you have to start like at the bottom, and you kind of like grassroots your way up. It's like developer focus, blah blah blah. But in Asia, like, first of all, you just don't have enough startups. The startups here are not that technologically advanced that they're like, yes, I need the newest database, I need the newest like microservices architecture or whatever it is. And so they're just happy to use AWS. They're happy to use Azure, all the free credits. Like, they don't want to use some new cutting edge thing. And the MNCs or the big companies here are much more risk averse. They want to use IBM. They don't want to use some startup that they don't know if you're going to be here in 6 months, right? So it's like, who are you going to sell this B2B software to? Like, no one wants to buy this from you, and you'll probably just die. And so, like, it sounds like very cynical, but I just think we're not really at a place where, people are ready to buy B2B software the way that you see in developed markets. it's not that it can't be done. You just have to think about how you're doing it right. So I think the Indians have been really good at this. So if you look at the Freshworks of the world and all this, like they basically go really low end, bottoms up, and they're saying, hey, you can't afford Salesforce. Guess what? Here's a CRM that's like way cheaper. And they have really cheap technical labor, and they don't spend a ton, like it's all sort of online sales, and they can drive traffic, and they can make the math on that thing work. And then they can, they can go attack all the people that are not going to buy Salesforce. And then they can slowly move up market, and they're leveraging kind of the asset that they have. But I just think like it's really hard to like wake up one morning in Southeast Asia and be like, yeah, I'm going to start selling software to like people who just really are not that interested in buying software from you, right? And so I always tell people it's much harder to turn no's into yeses. You just have to go find the kind of people who say yes. And sadly, the kind of people who say yes to software sales do not live here. And so I think that's and that's why you see more consumer stuff, right? Because consumers are more willing to try new things. But then the problem is the consumers in our region have no money. So, it's sort of like there is like a narrow set of things where you need to like figure out your lane where you can make money and stay alive long enough to turn that momentum into more, right? So like C Group, the thing that made money for them was gaming, right? Gaming is you don't need a license for it. It's kind of the same no matter what market you're in. You don't need to like ship a package anywhere, right? It's like there's an internet cafe and it works. And once you get it working, it prints money. But even then, if you read the C Group like financials, where are their most profitable markets? It's still like Taiwan, Singapore, Australia. So you think about like so you're back to like who has money, okay? And how do you get that money without spending all your money trying to acquire those customers before you can get enough mass and momentum to then be like, okay, I'm gonna like layer in payments. I'm gonna go layer in like something else. So I guess when we think about like TAM, like at the end of the day, it should be like a big TAM, but starting out, you really need to be focused on like, are there actually enough people here who want to buy the thing that I'm selling at a high enough price that I can acquire affordably, that I won't die before I run out of money? And does that actually turn into something that can compound into a real business?
Bikesh.
Yeah, I mean, I wish I saw more SaaS-based solutions here in Malaysia, but we're not a product nation, right? It's so, I mean, look at Grab. It's not even a product, it's a service. You click a button, offline thing comes to you, right? So we're predominantly that. So that was one of the reasons also scale was always difficult. And it was easier for them to just start with saying, let's just focus on the SOM, what's around you, what you could have access to, and then how quickly could you go to the next bigger territory. But of course, always focus on the right customers, make sure they have money. If not, what's the point? If you could truly find a lot of real software as a service companies, they tend to what we see as our portfolios and stuff that comes across as tend to be more finance-based, fintech. And then comes again then the license regulation. So they might have a license here, got a beautiful SaaS product, but all they can do is scale towards Malaysia. And then you go like, Malaysian SMEs, how many of them are going to pay for this amazing expense management software like Expensify, but local and cheaper? So then they got to think about rushing to the next market quicker, but then the VCs want to see an annual recurring revenue. So it's like this whole, it's difficult. It's not easy, but the ones who really figure out how to get out of this rut, then of course they're the ones worth funding. But we love to see more products which is software as a service by default. It's something we're trying to advocate. But 99% of Malaysian SMEs are service oriented. It's in our blood. So what happened? The mid-cap listed cos in Malaysia are all product manufacturing companies. So it's very, very obvious where the route is to basically make money. But the bulk of the people still don't do that. They still like the hard way to do stuff. And it's just in our DNA. It's not going to happen overnight.
Right.
So start genome list can wait.
Right. Got it. So guys, before we take questions from the audience, do you see something similar in the Pakistani market? And what are the most made up of startup type over there? Are they more B2C, B2B?
Pakistani market has seen a lot of changes in the last 3 to 4 years. There was a huge boom that came in 2021. So the dynamics are as such that a lot of founders came from Careem, which is a ride-hailing unicorn from the Middle East. And most of these founders used to be the early employees. I myself have worked over there for 3 years. So all of these startups you see in the ecosystem, more or less, they will have people from Careem as founders or as the employees over there. So that ecosystem was built up from the ground by Mudassir. Mudassir, again, is founder of Careem and is from Pakistan. Initially, when the funding came in, so there are a lot of problems to be solved, and technology is the way forward for sure. So it was mobility, it was e-commerce, whether B2B, B2C, it was everywhere. And then funding stopped. There are still challenges on the government level, like inflation and political instability. So right now, e-commerce is one of the sectors that is growing rapidly. It has a lot of potential, and most of the startups are over there. But recently, one of the startups that we see that is growing is Bootstrap. It's not even funded and is in generative AI space, right? And many people haven't heard about it. It's called Viro.ai. They have this app called Imagine, right? So we are working with their founders, and they are one of our top startup customers in ASEAN, because Pakistan is part of ASEAN and AWS, right? So that's there. So sometimes, even without the funding, there are pockets of success that you need to look into. These startups don't get that visibility because the funding is not coming in, so they don't do these press releases and don't work on the optics. But they are working in silos somewhere in the corner, and you need to find them out. And then, since we are the technology player that most of the startups are running on, so we kind of identify that from there, and then we connect with them. So that's there. And then one of the startups from Sunicon from Malaysia, Aerodyne, one of their tech team is based in Lahore in Pakistan. Okay. So I was talking to their founders, and that was a surprise for me as well, that the talent is over there. But overall, what we see in the Pakistan startup ecosystem is e-commerce is one of the growing sectors that has a lot of potential. Bazaar is one of the startups that is on the top right now. And we see that maybe soon they might become the first unicorn of Pakistan if they are in the right path. They have raised significantly. They have the Careem roots as well, because one of the founders also worked in Careem. So that's there. But there have been certain shutdowns as well. Airlift was supposed to be the unicorn, right? It massively grew and then crashed instantly as well. So in that case, there are different dynamics to Pakistan market than outside or in ASEAN, because at the end you need that stability in place for that to happen. So yeah.
Of course. So the what you've just said sort of like resonates to one of the questions the audience have asked. What are some of the notable success stories of startups and VC-backed companies in Asia's emerging markets? So since Gaz, you sort of shared that, maybe I'll go to Bikesh first, then Shiyan quickly.
Yeah. So okay. So Shell has only bought one company in this region, in Malaysia specifically.
Shell, the oil company.
Yeah, Shell Global. And it was basically from us, right? So we've shown it was a company that took about 8 years to basically grind and get going. They were ahead of their times. They were within the EV charging space before EV was even cool. And Shell saw it as a way to basically enter the market as a non-fuel revenue. And they bought it off our hands, and founders had an amazing exit, and now they become LPs into our fund. So nice little circle that happens, but it's small, but big enough to kind of get the thing going. So I think there's a lot of these stories, but we don't write TechCrunch articles about it. Malaysians, we don't like shout about it. It's not in DNA, it's not in Tech in Asia, blah blah blah. And there's so many multiple exits we had in between we see happen, but people don't shout about this. A lot of this trade sales, the secondary sales itself, deliberately they come in and they say, like, we don't want press about this. This is a strategy of us acquiring it, and we don't want people to hear about it in the news. And it just stays in the down low. So I think that a lot of that happens, and we don't see much about it in news. And maybe that's a bad thing, because it doesn't kind of motivate people. But of course, we're also on the camp that's saying, look, it's not just about headlines. There's so much more things that matter than just keep shouting about success is measured by an exit and basically more fundraisers. But what at least we're starting to see more corporates in this country. So like what Shiyan was talking about, right? Like who would pay for solutions here? So we're starting to see the shift happen in Malaysia, right? SMEs, maybe some of the mid-tier companies who are profitable, they have cash. But they don't want to go pay Salesforce.com kind of rates because they go like, that's ridiculous. I'm never going to spend my blood, sweat, and tears money running a struggling manufacturing firm to make that kind of income. Now just go away in terms of streams to revenue for products. So there's an opportunity now for local solutions to come in that and qualify themselves to be still viable solutions, and they're willing to pay. We're starting to see the key thing that happens is where we play things like bridges. They don't know who a startup is or why they would trust them, but they know people like us. They've got some kind of trust with us already. So startups inherit trust if we invest in them and we take them to corporates and saying, I'm ensuring that they will exist for the next 12 months as they roll out the software because I'm fundraising for them and investing in them. You can be sure that they're going to outlast your procurement process, right? I'm here to make sure that doesn't happen. So that slow shift is happening, not just in Malaysia. We see Philippine family businesses contact us for solutions, and so is Indonesia. It's a hustle to basically do this, but it's slowly the tides are turning, we can see.
Right. Okay. Well, we are entering the some of the last few minutes of our Q&A. So maybe instead of like getting everyone to share their view, I will just let any of you pick some of this question. But before that, there's one question that is particularly for you, Shiyan. What are the usual main challenges VCs like you and the ones in Singapore or US face that deters investments in Malaysian startups, founders? And why do you think these challenges persist?
I don't think it's necessarily unique to Malaysia, right? I think if you sort of just generalize the question to like, why do people say no? So I think first of all, like just level set, right? 99.5% of my job is saying no. Okay, so I look at 1,000 companies a month and I say no to like almost all of them. So, and venture is a very weird asset class. Just because you don't raise venture money doesn't mean you don't have a great business. It might just not be a good fit for a venture capital fund. So venture capital funds have their own investors, limited partners, who expect a certain level of return. And so that kind of dictates what we look at, that we need to expect a certain level of return within the 10-year fund life. And so like, I think sometimes startup founders don't realize that, or they don't think about that. And when you say no, they're like, it's like you told them their child was ugly, and it's like very insulting. And you're like, I'm not saying your child is ugly. I'm just saying your child is not for me. Right. And so I think that's something just to bear in mind, which is like the startup industry, the VC industry has done a really good job of PR about VC funding. But like I tell everyone is like, you didn't start a business to raise money. You started a business to make money. And so you should focus on how am I going to make money? And I think there's a related question in the chat, which was like, how do I increase my chances of getting funded? You go make some money. Like the best money is customer money. It isn't investor money, because the hardest thing in the world is convincing someone else to pay you for something that you made. And if you are able to actually convince a customer to pay you money for something you made, then you can be like, hey, I'm onto something. It isn't making a PowerPoint deck. And so I think that's like item one. Item two is like, we say no to a lot of things because basically you can't answer the question of how does this thing get me 100x? So if I give you 100K, 10x is a million, right? 100x is 10 million. How do I get $10 million back from this 100K check that I wrote, right? So from this point forward, like you could do the math backwards, right? So like an easy rule of thumb is, what would I have to imagine for this to be 100 million annual revenue business? And if you're selling freemium at like $15 a month, that's a lot of people that you need to put into your product. And like, do I actually think you can do that? So I think like sometimes people just don't think about like what are the incentives of an investor and like who are their bosses? Like my bosses are my investors. And so I think that's one. And then the other thing is they don't realize like how the same their thing looks like everything else. I guarantee I've seen 15 versions of every pitch in every market that I've seen. And so then the question is like, what is your insight about this problem that is differentiated? Like, what is going to be able to make you actually win? And people will be like, well, I'm working really hard, blah, blah, blah. Yeah, okay, everyone's working really hard.
Yep.
That doesn't actually mean you have an edge. So sometimes you have a distribution edge, sometimes you have a technology edge. All these sorts of things I think matter. And it doesn't mean you can't build a great business.
Yep.
But you probably can't build $100 million annual revenue business within 7 to 10 years.
Yep.
Which is really hard, honestly. It's really
super
freaking hard.
Percentage of so low.
So, you know, I think that's kind of like something to just think about, which is like most people, you can probably elbow your way to $1 million of revenue. Right? Like if you think about hard enough, you work hard enough about it. But how long is it going to take you? And then once you get to that million, how are you going to get from 1 million to 10 million of revenue?
Right.
And then that next step up, right? And it's like, not all businesses are designed in a way to do that within a short period of time. That's why they tend to be software businesses, right? Because you basically have, you know, zero marginal cost. But that's not true in product businesses, services business, anything with logistics, intense labor costs, things like that. So, yeah, sorry, I don't want to, we're at time.
No, those are good feedback. So, there's one question here. What are the anticipated trends and development that will shape the future of startups and VC in Asia's emerging market? Gus or Bikesh, do you want to take, any one of you want to take this next?
Yeah, I can jump there quickly. So what we're starting to see is angels get more aggressive. I think in Singapore, you can start seeing that they're forming their own little super angel clubs. We see that in Vietnam, we see that in Thailand, that they're coming in and giving VCs a run for their money. So I think that seems to be kind of interesting. Even early stage startups that we see trying to raise $1 million to $2 million don't even go to pre-seed or seed VCs anymore. They syndicate around with angels, and it seems that they seem to be a little bit more active. So that's quite an interesting shift we've seen, and didn't happen 5-10 years ago. It seems to be more prevalent now.
Okay. Next question. What are the gaps and area for improvement in terms of ecosystem infrastructure and support for startups and VC? Who would like to take this? Maybe Gus?
Yeah, sure. So I'll take this from our end, what we are trying to do. Like I mentioned earlier, that we are launching a data center over here, and we see the gap of skill set and talent. And we are launching this program called AWS Restart, where we are going to train young graduates, young professionals on cloud technologies. So once the data center is in place, we have the skill set to run on these, rather than, you know, bringing in expats from outside Malaysia to do this. So this is one of the skill set gap that we see. Then in terms of the emerging technologies, right? We ran a couple of accelerators globally, then we ran them on the regional level as well. Even on the global end, we see that not many ASEAN startups were able to, you know, be part of that global accelerator. And even on ASEAN, there were few markets, but majority of the markets don't have that in place. So providing mentorship next year to running different accelerator programs with few of our partners in the generative AI space is one way to look at it, and, you know, trying to solve that gap. That is something that we are looking into in supporting the ecosystem on. And then leveraging our global network, if you want to scale outside your market, you want to scale from, let's say, Indonesia to Malaysia, or even for that matter, to ANZ, Australia, New Zealand, or US and Europe. How you go about it, right? What sort of strategy needs to be put in, what doors to open for, and how to, you know, leverage on that network. All of these things, we have several programs in place that we will be launching next year to support the startup ecosystem, because most out there see us that we just provide credits, right? But credit is just one part of it. Like, it's building that relationship. There are, like, right now 8 to 9 programs that I'm running separate to the credit program that we have placed. Yes, credits are important, especially for early stage startups. But what's next, right? How you review your tech stack, how you optimize that. So there are several programs just focusing on the technology aspect of it, because new services right now, I mean, we have around 236 services, but we have launched few more on reInvent. So for me, even keeping a track on that scale for that many services is, a challenge. So how it is for early stage startup, right? So in that case, developing those programs and also getting that customer feedback that what is required from our end. And what I say, and to a lot of startups out there, that 90% of the time we can actually support you. You just need to be clear about your ask, what is required.
Right.
And we will try to support you accordingly. Yeah.
Okay. So unfortunately, we ran out of time. But if I could get each and every one of you to depart, to share a final tip, to our audience who are mostly in the pre-seed, seed, like very early stage level. For the VCs like Shiyan and Bikesh, what kind of tips or advice you could share to them, such as for you to say no to people like them, right? I mean, it's yes to people like them. So what are some advice on that? Bikesh?
So I guess I'll say, if you have an idea, just start. If you're going to pitch to us, because we fund people with PowerPoint presentations, but the more you come with a PowerPoint presentation and an MVP, but more importantly, some kind of learnings of what do you know that the others don't. I think that's the one that sets us apart, because like Shiyan said, we see 15 and 20 variations of the same idea. So when you come and you tell us something that makes us go like, whoa, I never heard of that angle before or that approach before, then we get excited. Because the key thing that we say no to usually is because of the team. We internally have a shopping list of ideas that we also want to get into. So it's just about like swiping left until we want to swipe right on you and saying, this is the team that will make it happen. So when you say that right key things by showing evidence, just evidence-based, that's the way you got to do it, right? So don't just sit on your ass and plan, just, get some action going.
Awesome. Shiyan.
Yeah, I would echo that. I would also just practice pitching people that are like normal people. Just like normal people, right? Because at the end of the day, business is quite simple, right? Is there a problem? And is it painful enough that someone's going to pay you to solve it, right? And if you cannot really explain the problem, then you don't actually really have a strong understanding of the problem.
But do you pitch the product and solution offering, or do you pitch the business model? Because normal people may not all have a strong business acumen, right? Or do you mean both?
I mean, I think when you get started, you have a pretty hazy idea of the problem and solution. So you have a hypothesis, this is a problem, and then you have a hypothesis, this is the solution to that problem that I think exists. And what happens is, as you talk to customers and as you build your MVP, the resolution that you have on that problem definition and that solution improve.
Yep.
But you don't actually get that improvement in resolution until you actually talk to people and say, hey, can I actually watch you do this thing that I think you have a problem doing? People like to walk around and be like, hey, don't you think my product is great? And they think that's looking for feedback. And then people want to be nice. So they're like, yeah, that seems great. They're like, would you pay for it? You're like, oh, no, not me. I wouldn't pay for that. But maybe Gaz over there, maybe he has the problem. Maybe he'd pay for it. So I think you just have to be really honest with yourself, but talk to normal people that you think might actually use your product and watch them do the thing that you think they have a problem with and say hey, if I were able to solve this for you, you could do this 10x cheaper or 10x faster or whatever it is. How much would you pay me to solve this thing for you? And be able to actually articulate that. I think just say it more often and try to refine the way that you communicate that, because I think sometimes people show up and they don't even have a very clear articulation of the problem they're trying to solve. And it's because it's kind of in their head and they haven't actually talked to any customers. And so I think that is always something that you don't need money to do. Talking to customers is generally free.
Agree. Thank you for that. Gus, what are some tips and advice that you can depart to, early stage startup founders to start to get into the market, to succeed, let's say, or to get traction in the beginning?
Yeah, I mean, both panelists have shared from the business end, so I will keep it simple and short. An ex-founder myself. I mean, if you don't give up, you don't fail, right? That is one of the mantras that I personally believe in. And then also, I did a couple of angel investments, and my investments are mostly in founders, not in ideas, right? If you have the resiliency, you will always evolve, change, you will not give up, and eventually you will be successful. And that is what I want to leave the participants with, that keep trying. I mean, if you are not giving up, then you are actually not failing, and get out of your comfort zone. Go out and test with the real customers out there. What early stage startups usually do, they are so much focused and in love with their idea, and they are asking their own network. The network is always going to give you the positive comments. Yeah, this is great, this is that. And once you go out there in the market, even with the slightest, on a very basic level MVP, you will actually get the feedback where you are.
Right.
So get out there in the market, test it as soon as possible, and then iterate accordingly. It's a process that you have to go with. So don't get, even if you're getting the negative feedback, don't take it as a negative feedback. These are insights. They are improving you, helping you. So continue down that path, and eventually you're going to hit product market fit.
Gus, if people want to reach out, to find out more about, programs that AWS Activate is offering, how can they reach you?
I'm super active on LinkedIn. They can reach on LinkedIn, or you have my email. You are one of our partners. So through you, they can reach out to us. Hustle Fund is our partner. 1337 Ventures is our partner. So for anything, they can reach out to our partners in the ecosystem. Through that, they can connect with me, or they can directly reach out through LinkedIn as well. And if you want, you can share my email address with them.
Got it. And Bikesh, and if someone wants to pitch you, how can they reach you?
LinkedIn is fine, but our team listens to pitches every Tuesday. So on our website, there's something called Pitch Tuesday, aptly named. Just put your name and contact number, and they'll schedule you for the next pitch.
Right. Shiyan?
We have a form on the website, so feel free to put in your deck and your information, and we will respond to you.
Right. And with that, thank you everyone for tuning in. Thank you, Shiyan. Thank you, Gus. Thank you, Bikesh, for doing this and sharing your advice, your tips, and insights of the market. Appreciate it.
Thanks, Paul.
Thank you.
Thank you.
Bye-bye.
All the best.
Bye.